Good morning, everyone. Today is the 4th of October. This is Brad Matheny again. I'm doing a quick little update to the excess phase peak pattern that we talked about just a couple of days ago on the ES. You can see it here. I'll go back to 15-minute, which is where I think I was on the original chart. So you can see yep, here you go. You can see the excess phase peak pattern, okay? And you can see this rolling top moving into this flagging formation. Then we had the breakdown into support. I kept telling you and I warned you that price could invalidate at any point during these excess phase peak patterns. So understand that we could have had invalidation here to the upside, or we could have had invalidation here to the upside, or here, or even way down here, which would have been the end of the pattern and would have likely rolled higher anyway. But what we really had was this rolling peak. So the way the excess phase peak pattern works is this high, the high set up from roughly the rolling topping formation, which I used off of these flagging channels in this case, was the ultimate high. You can see these flagging channels here going way back. You see way back over here, flagging downward. I use that instead of this ultimate high up here. So I was able to identify what I called rejection all the way down, indicating that we had this continued rejection level, flagging level, moving to the right through this pattern. We had established the number 3 area, the new lower low right here, and we were moving into this consolidation sideways flag, which is what we had here. Now, throughout this entire move, until we got up here, throughout this entire rotation, we are in this sideways flagging pattern. Oops, I wanted that bar. Well, I'll just draw another one. We were in this sideways flagging pattern running right across these lows, these rejection lows, indicating that we would need a breakdown basically below this low over in this area to institute a number 4. So the 4 is the breakdown, this move. 5 is the ultimate low. We never got the breakdown. You see here how price rejected, rolled up, stayed above for the most part, rejected this level, rolled up above these flagging channels. Remember, these are the flagging channels here, the blue lines. Rolled up, rejected off the upper flagging channel, rolled back down, rejected off the lower flagging channel, then eventually this morning broke out to the upside. So at this point, this is rejection right here. This close above this level right here, closing above, reaching a new high, was rejection of this excess phase peak pattern. But if you understand anything about what we're talking about here with the excess phase peak pattern, is that we had a peaking pattern here, rolling down into flagging and rejected out. We now have a new peaking pattern here, which will roll down somewhere over here into flagging and either reject out to the upside or roll down into consolidation, maybe reject up or maybe break down again. So these excess phase peak patterns happen constantly, literally constantly. And all you need to do is be able to look for them and see the breakaway. So remember, you set up a peak. If you get a breakaway, you can come back, look for flagging. In fact, let's just go back here, way back here. Okay. I do like to start at major peaks, okay? Because I just think that major peaks are critical. to really understanding. So we'll come back here and look for a different peak. Okay, here's a decent one. Yeah, let's just stick with this one. So what we're looking at here, I like to look at major peaks because major peaks give you the clearest identification of flagging. You can even use this if you wanted. So we come up, we peak, we flag right here, very short little flag. We break down to the number 3 area, establishing our low in this area. Do we break into number 4? No, we roll sideways, almost break down, then roll up and get into our breakaway phase above our resistance level. So again, right here, we're into breakaway phase, setting up a new high. Now, you could qualify this as kind of a dual pattern. Okay, you could qualify this next one as a slight flagging here, followed by a deeper flagging here. Okay, so you could call this kind of a dual pattern. We get into the peak, the pullback, the flagging, which is phase number 2, break down to our new lower low, setting up our resistance and support levels. We consolidate, moving into a flagging pattern, come down here to our ultimate low. This could end up being, again, our secondary low off of these peaking and flagging patterns. And again, finally come back over here and we finally get just a tad, maybe not even a tad higher right here than this previous level. And then we roll into this consolidation. Now, what happens here? So let's play this out completely. Draw lines where we need to. So we're going to actually get to this level, draw it straight across. It rejected. You can see right here, it rejected and may have gotten right above it, but it rejected. And then we're going to come down here to this rejection point, carry it forward, and we will come down here to this rejection point, carry it forward. Now, what I'm looking for when we get to this type of a complex pattern here is I'm looking for how and when price moves into rejection. So this level was obviously rejected and we rallied back above this level. Fine. Now we're back into this middle channel. Okay. In other words, this lower low is essentially negated and we're moving now into this channel between this upper level and this lower level. So I'll mark this lower level as green. And when we get into this zone, we're looking really at this breakdown, this A, B, C. Let me draw it here. No, A, B, C. Moving into this zone here. And that rotation then sets up that peak, pullback, flag, breakdown to the new lower low, because this has been invalidated temporarily. We got up to a new high over here. So you can see this. In fact, I'll highlight right here. This is our new high from rejection right to there. That is our invalidation of that second phase break. We got to the new low, but we got back above the peak of the flag. So that means through Fibonacci theory, a new higher high means we must attempt to try to take out the most recent high, which is over here or over here. So you can see this would be a secondary high price level here, which we get above right there. So once we get into this mode where we've broken these highs and we've rejected this deeper low, you are now moving into a chance to say, hey, we are going to potentially try to get above this level or potentially try to get below this level. Okay, so here we go. Now we need to play this out and see what happens. As we roll through this channel, yes, you can carry these support resistance levels over, but you can see we get above the upper resistance area right here. Clearly, Fibonacci price theory is telling us at this point the trend wants to move higher. That's what that's telling us. Price wants to try to move higher, but it rejected immediately downward, indicating what? That if price cannot make a new high or continue to make new highs, then it must attempt to come down and take out most recent lows. Most recent lows would be here, most recent lows would be here. You could argue here as well and here as well. So it's got to come down and start taking out lows. All right, well, it does. It takes out this low. It takes out this low. It takes out this low. And it takes out this low. And then hits this lower channel and rejects. And it rejects back to the upside. All right, fine. So price clearly rolled back down into this channel, which is again our borderline for, are we going to go higher or are we going to go lower? This is our range. And until we get out of that range, we're going to stay in this range, rolling through highs and lows. So we reject here, this big bar up. If it cannot continue to make new lower lows, what must it do? It must turn around, come back up, try to make higher highs. So here's our rejection. We get a high here, and then we get a couple of highs over here. But we really don't get too much else on this. This was a quick downtrend. We don't get any other really unique or standout highs. So this rally here confirms that we're in an uptrend. This rally here, setting up a new higher high, confirms we're in an uptrend. This rally up to here confirms we're in an uptrend. And then we finally break the upward channel here. And here is our breakaway rally. Now, were there flagging formations in here? Yeah, probably. I mean, I can see a flag right here that got higher. I can see a moderate flag right here that broke down. So hypothetically, I can draw this as a flag invalidating. I can draw this as a flag breaking down to 3 and stalling, rolling back up above this flagging formation here would give us indication that we're going higher. I can see flagging here that invalidated. Let me try that again. Flagging here that invalidated to the upside. I can see flagging here that invalidated to the upside. I can see moderate flagging here. Try that again. That broke down, stalled into this channel and broke down to an ultimate low. I can see flagging here that invalidated to the upside. I can see flagging here that invalidated to the upside. And I can see moderate flagging here that invalidated to the upside. Do you see how these patterns occur everywhere? And again, there's inverse patterns as well. Okay, I could turn around and, change the color. I don't want to change that one. But I could do these just as easily to the downside doing this. Okay, here's a downside pattern rolling down. Oops, don't want that. Rolling down. Oh, come on. Am I not in drawing mode? There. All right, maybe I've reached my maximum drawing capacity. So anyway, here you go. Moving down, flagging, breaking down to the lower side. Okay, that's the end of that. Coming up here, moving down, flagging, breaking down to the lower side. So this rejects these patterns would, and I don't know why it won't let me draw. Let's see here, brush. There we go. So when in a downtrend, you get these types of patterns: flagging, breaking down, flagging, breaking down. These are continued downtrends. Here we have a downtrend, flagging, breaking down. So this is a invalidated pattern. The way a real downtrend flagging pattern would work is like this. So you have this move here, flagging down here. This is the actual inverted pattern. Let me try to draw this. flagging down, flagging down. There you go. So we got a downward move, pulling back, flagging down, breaking to a new temporary low, consolidating, in this case a high, breaking out of this trend and running to the ultimate high in this case. So remember the pattern that I showed you, and I will draw this for you. There's basically an upper pattern and a downward pattern. So a downward pattern is like this, okay? It would come down, set up a peak, and then at this point, flag downward like this. Now, it's either going to break to that level 3, which is a new level, consolidate, and then maybe break up to a level 5. So this would be coming from wherever. And this is the bearish pattern. So here you have your 1, 2, breaking to 3, consolidating over here to 4, and moving to the ultimate high 5. Now, the opposite for the bullish is it comes up, pulls back, flags, and I'll draw this in. There we go. And then potentially breaks down, consolidates, and then breaks down into the ultimate low. Okay, so here in blue, blue, and blue, you have the 1, 2, 3, 4 consolidation, and 5 ultimate low. So again, these constructs, if you understand them, these are just inverse. 3 is an inverse of 3 here. 4 is an inverse of 4 here. 5 is an inverse of 5 here. 1 is an inverse of 1. 2 is an inverse of 2. It's the same pattern. Just one is upside down, one is right side up, however you want to think about it. But these are the ultimate constructs of price. These happen everywhere. Okay, here's a peak, flagging, breakdown, stalling, down to ultimate low. Oh, look, here's a low. We come back up, we flag. Now this is an inverse pattern right here. We break, we come up to our stalling pattern, we break, we reach our ultimate high. So there's an example of a breakdown move to the downside and a break up move, an inverted pattern to the upside. Can you see it? Can you see it? Okay, so here we get a breakdown. It's very tight, moving up, flagging, breaking down, reaching our consolidation period, breaking downward, briefly rotating, hitting our ultimate low, and then rolling back up, and then attempting again to make a new low. So this is an extended type of a pattern, but it's still very valid. Okay, here's our flagging pattern here to the downside, moving up, flagging back down. Does it roll? Yes. Does it invalidate? Yes, right here. It invalidates. We're going back to the downward side right here. So again, they are everywhere, literally everywhere. And if you can learn to see them and learn to understand what's happening, you will be able to pick apart any chart, literally any chart. And like I said, I could draw these any time frame, any interval, any chart, any setup, anything. They are the constructs of price movement. I don't know how to say it any other way. If you understand the excess phase peak pattern, and let me come back over here to show it to you. If you understand these patterns, you will be able to understand almost all price activity on any chart. It doesn't matter daily, weekly, monthly, 2 minute, 1 minute, 15 second. This is the construct of price, the basic construct of all price activity. Now, there are variances as to how big and how far things will move, whether prices like we saw back over here, whether it's going to channel and really battle its way down into this ultimate low. I mean, and in reality, we actually have other constructs in here. So we come back into this area again. If I really wanted to, sorry, that's my Discord going off. If I really wanted to, I could move this 15-minute chart down to 5 minute and I can see multiple constructs. Okay. I can see multiple downward excess phase peak patterns playing out right here. Literally, as we're making our bigger 15-minute pattern, we're making a bunch of 2 and 3 and 5 minute patterns setting up to the downside. So this is kind of a complex structure where these are a little bit more simplified. But again, they are the basic constructs of price. Okay, that's what I wanted to tell you. Now, where we're at over here in the current market is look at that. Okay, so we haven't flagged yet. We rolled back down. Get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. We look like we're starting to flag a little bit right here. So what I would be looking for is this. Peeking up into this area, rolling down here, setting up some sort of a flag, and then we'll see how it plays out. So at this area, if we get confirmation this is the bottom, you have a little 15-minute, maybe to 2-hour rally phase, then it either is going to break down or it's going to invalidate, just like I told you. So it always gives you that A or B outcome. That's what I want you to consider. Everything I try to teach you should be giving you that A or B outcome. Either A, it's going to do this, or B, it's going to do that. Either A, it's going to flag right here, or B, it's going to continue to move downward before it actually starts to flag. So we need to get some confirmation of a flag. Here we go. We're moving back down. So this is again, we're waiting for this to confirm that we're in some sort of a flag. And what would that confirmation be? Well, maybe go down to a 5 minute and wait to see some upward channeling trend. That's what we're kind of looking for. We're looking for an upward channeling trend. That's what our flagging formation should look like. Something that trends up like this. Okay. Again, hope this helps. Like I said, it really does pay attention. If you do pay attention to this, you'll find that this is everywhere. Try it. Again, try to find a peak. It doesn't matter. Look, I'll go to Japanese yen. It doesn't matter. Try to find a peak, any peak, and look for the flagging formation. So here's a great big peak. You come up, peak, come down, flag into this area. We're looking for a breakdown here. We get a breakdown of the flag. We come down, we get a breakdown to our secondary low. And at this point, oops, we need to see if we break above or below that level. Ultimately, we would have to break above this level to go ahead and see some continuation of trend. So this is our 1. This is our 2. This is our breakdown to 3. We never get our breakdown to 4 because we never get the move to the ultimate low. We eventually roll through that same type of sideways channeling, get the invalidation right over here on this big move here. And that's where we're at today. Here's our invalidation right here. We are back in an uptrend. And as long as we stay again through above this level and start to break these highs, because here's the high rejection point of the flagging. Here's the support level coming across here. And again, you can see there's multiple shapes and patterns in here. Just got to study them. There's a lot of peaks and troughs in here for you to look at, but this is a good example. Start with a peak, see if you can find it, and then come in here and look at these intermediate peaks. Can you see one here? Flagging. We get a breakdown. We never get below the low. We rally up above the high. We're bullish. Flagging here. Flagging. We get above it. We're bullish. Flagging. We get above it. We're bullish. You can even be a little more critical. You can come in here and say flagging, break down to number 3, break down to number 5. That's our ultimate low. Rolling back into this long-term flagging, breaking above this high, getting bullish right here. So the patterns are, like I said, everywhere. Okay, guys, thanks for paying attention. Hope this helps. Talk to you later.